Hello, welcome to my YouTube channel. This is my series specifically focused on option selling, and in this series I am trading all the options in selling, and I will try to explain you what are the reason for trading, and I will share you with me my contracts note. This is the contract note. So these are my live trades I have done, and this is post analysis video. So I will try to explain what are the things I have taken into consideration for trading. Before that, let's go to which are the rules that I follow. I only follow one time frame, that is the 5-minute time frame. I don't divert my attention to 15 minutes or 1 hour or 3 minutes, nothing else, only 5 minutes. Second is thing, I only take price action into consideration. It means I read each and every bar while they were forming, and in what are the price taking place in accordance to previous candles, which allow me to give a probability on which direction the price is going to move on. Based on that, I trade my option selling. So I study candlesticks, nothing else, and price and behaviors to previous candlestick. My risk to reward ratio is 1:3 or more than that, or 1:4. If I am risking 10 to 15 rupees, my target is more than 35 or 40 rupees. I try to understand buying and selling pressure in respect to the candles that they are forming, and bulls want to take the market upside, and bears want to take the market downside, and in between that there is a probability in which the direction can move, and based on that we can take our trades. So these are my discipline for trade selection. I try to avoid bad trades. Sometimes I do take, and I do not take we should not take unnecessary or low probability trades. I will let you know what are those trades. I completely try to avoid counter trends. Means if this is a bull bar, this is a good move, so this considered to be a counter trend, but this is an unexpected move, so we should never try to judge this move, even it is looking good, but it is after the market. Once the market is forming, we don't know what's the price are going to form, so based upon that we should never try to judge this move. So for me, this is counter trend. If this is a move, then this is the counter trend. We should never try to judge this movement. We should always try to take the trade in direction of trend. So and second thing is, do not try to assume a breakout either in upside or downside. Always wait for the confirmation. I will show you in this day. This is the chart of this is day is 23rd April 2026. Okay, so I pay close attention to the previous highs and previous lows and the price behavior. So this is my entry setup, that once the signal bar has been formed, if I want to go long, means if I want to sell PE, I will only enter if the signal bar, high of the signal bar get hits, then I will enter the long position or sell PE. If I want to go short, if once the low of the signal bar get hits, I will sell my CE on the next bar. This is my approach. So let's go to the chart and try to study what I have done. So as you can see that there was a gap down movement. The market on this day on 23rd, it gap down open, and most of the time it tries to reverse. So as you can see that this is the bar 1. Bar 1 is a doji bar, means there is a wick above and below, and bar 2 has a wick down, bar 3 has a wick down, and as you can see that the bulls were trying to take the market up, but in the very next moment, as you can see that there is a bear bar with a long wick above it, so it means that there is a chance that the price will move down. So if I want to go short, this is my low low one short, because the low of the 1 has not been hit over here, low of the 2 has not been hit here, low of the 3 has not been hit here, and this is the low 4. So as you can consider this as a signal bar for me. If I want to go short, if I want to sell CE, this is my low one shot. But as you can see that this is overlapping bar, and we should go for a low to sell setup. So after that the market, the bulls were aggressive, they didn't allow the bears to get control, and the bar 5th formed, and after the bar 5th you can see bar 6th has formed. So you can see that the bulls were aggressively buying below all this bar. So because of this wick and because of this bull bar, you can see now we can reverse the approach, that you can see if you want to go long, then this bar 3 is a signal setup for bar H1. This is an H1 buy setup, and if I want to go long, I have to take a trade above that, but that was a low probability trade. And after that you can consider this as a signal bar or this as a signal bar, but I didn't took this bar 5 as a signal bar, but I took 6 as a signal bar because it was a bull bar and a good confirmation. Now in stock market, buying costlier is cheaper and buying cheaper is costlier. This is much more cheaper than this, but as you can see that this bar 4 can shake you up and we don't know what's going to happen, but bar 6 was a good confirmation bar. So I took a trade of selling PE on bar 7. Let's see at what time it was. So at 9:45. So here is 9:46. Once the high of this bar was broken, it was broken at 9:46. I took a trade and sold PE at 275.35. okay, after that as you can see that market went up and I was in 35 rupees of profit, and in previous day I didn't took the profit and I has to get out at break even. So in this day I was hoping to just get it out at 40 rupees, but that didn't happen. And after that I closed my trade at bar 14. Let's see what was the time at bar 14. It is 10:20. So around 10:18 I got out the trade at 245 rupees and I got a profit of 1972 rupees. This was the only trade I have taken, because previous 2 days where I was making loss, so I was very much cautious about it. Now my initial thinking was, now let's see about the setup. So as you can see that bar 7 has completely broken bar 4. So this is a good bar and we should wait for a pullback. Now you can see that this can be an H1 pullback, but you cannot consider this as an H1 pullback. I will not consider this as an H1 pullback. This is, you can see that bar 13 was an H1 pullback, but we should wait for some more confirmation. We should try to, even if we have taken a trade around this, we should keep our stop loss at 10 to 15 rupees. My situation was that I was going to trade on H2 setup. So if I have followed my system, if you don't follow the system, there are chances of getting trapped into it. So you should always buy above. Once the signal bar has been formed, you should buy once that signal bar gets hit. So over here you can see that on bar 13, on bar H1, the signal, this can be signal for an H1 buy setup, so it can go up, but as you can see that was failed, and I was hoping to go for an H2 signal bar. Means if this could be heard a bull bar, or after that there could be a bull bar, I might have entered it for long. But as you can see, the system didn't allow me to enter, because bar 14 high didn't hit, bar 15 high didn't hit, bar 16 bar didn't hit, and bar 17 bar also didn't hit, and bar 18, 19, 20 till 20. As you can see that there is a down, means there was a V shape, and completely it was reversed down to. So there are many chances, many times I have tried to take a trade around below this bar, below this bar, below this bar. I have made huge losses in that, because in such scenario we do not have any stop loss. And the reason why we don't put the stop loss, because we go into a hope mode. If this was the scenario, if I would have taken this as my trade, then I would definitely put a stop loss at 10 to 15 rupees, then whatever happens, because I know that after that if H2 will form, I will re-enter the market. But H2 didn't form, and I was saved from getting into a trade, because once this gut happens, there are chances, there is a huge probability that there will be a follow through of some movement. But as you can see that this type of V shape happens in the market. Okay, but I was in a profit of 1900 rupees. Now you can see that this is a pullback, and eventually I was hoping to get into below 23, but I was hoping to get at low to sell setup, because this is an low one sell setup. After this move, this is a pullback, this is a low one sell setup, and if the market could have made above this or around this place, you could go for a sell to sell setup. Okay, but that didn't happen, so I didn't took the trade. And after that, as you can see, that market drifted down to bar 31. As you can see from here that there is too much of overlapping, and because in on this day the bulls were aggressively, they were aggressively, and because of this move there is a very little chance that the market will move down. Okay, so as you can see that this can be, if you draw a trend line from here to here, this can be considered as the first pullback, first break of the trend. And as you can see that bar 32 broke the high of bar 28, but after such a big down movement, you can see that it is difficult for us to continue on an upside, because the bears were in control for a long time. Now you can see that bar 35 or bar 34, considering bar 35 as an H1 buy setup, but I try to avoid in bar H1 buy setup, and I was thinking of, if the market goes into sideways, then I will try to enter into H2 buy setup. But then didn't happen, and it went down. Or you can see that this can be considered, if this is a big leg, this can consider this is the first leg and this is the second leg. So this bar 33 is a signal bar for low one sell setup, and bar 37 is a low to sell setup, which get filled at over here, but I didn't took the trade, and but it was difficult for us to judge this at around this level. If I go to this, it is difficult for us to believe that there will be a downtrend, but a bear bar of such a big move, I was considering it, but I literally missed it. Now let's go to this part. Okay, so bar 40 and 41, they were below bar 31 and bar 19, and as you can see that this is the same scenario of bulls buying at below. Now bar 41 is a huge bull bar, but and you can consider this as a double bottom, and this 41 as a signal bar. Buying above this or buying above 44 could have been reasonable. It could be a very risky trade, but I didn't took the trade, and I was later realized that I should have taken the trade, because the wick below this where bulls were really very aggressive. And as you can see that bar 44 is an outside bar, so buying above this bar with a stop loss of this could have been a reasonable. But anyways, I was in a profit and I do not want to lose my capital. Due to this reason, I didn't took this trade. Now let's come to this scenario. Again, our setup, as you can see that if our setup is good, then we will be saved by by our system. So bar 49 break the high of bar 38, and you can, if you put a trend line, you can clearly see that it is a good breakout, and it has also follow through. So again, my consideration was I want to go for a pullback if there was a drift on this sideways, and then I will consider to take into consider for a long. But once this happened, bar 51 formed, bar 52 formed, and bar 53 formed. As you can see that there is no H1, you can consider bar 55 as an H1 buy setup, and then you can consider if, but because of this reversal pattern, you cannot consider this for a long moment. You should never try to have it, because this goes into trading range, and eventually this after this move, you can consider this as a pullback. And if you are very aggressive, then there is a chance that you can place a stop below this and go for a second leg. So this is the first leg, and this can be a second leg, and so this can be a second leg. Okay, so and after that this is a leg, and but it is in a later trade. So and the price of options changes in respect to this movement. Many times the prices are totally going different when the end is coming, so it is not recommended to trade after 3 or last 45 minutes. I avoid to trade on that time, but I could have entered on this pullback. Sometimes what happened that where the people or I used to make mistake is that once there is a good move, so this is a good move, I will enter at any point at this place thinking that this is a breakout. Or sometimes it happens that when market, this is the scenario where most of the people get trapped, is once this is the market. And now let's see, this is a very good example that bar 39 is a very big bear bar. Open is over here and the close is over here, but that this didn't break any previous high, this didn't break bar 31. Okay, even the follow through didn't able to break 31, and all the bulls were ready to waiting for this moment so that they can enter at low and trapped all the bears. Sometimes what happens is when you see such a bear bar, we start entering at around this place or around this place, hoping that the market will go down, but eventually it turns down. If suppose we think this as a breakout of bar 35, and if we want to enter for a pullback, as you can see that below bar 43 there is a chance, and below bar 46 there is a chance. This is a pullback, but as you can see that after this moment, this cannot be considered as a pullback. This can be considered, the pullback should be around this point, not around this point. So you can say you can get saved from the system. If your system is good, then you won't be able to enter into a bad trade. So this was my day, and I only took one trade from here to here, and I was not going to get out of this trade, but because of my previous trade, I luckily got out at this trade, and this happened. But I was looking for a second leg up, but market tends to do opposite of what you are thinking. So this type of V shape definitely happens in the market, and this good system will avoid you from taking your trades. So this was my day. Thank you for listening to me, and see you in my next video.